Okay, session 3, chapter 4, activity-based costing. The learning objectives here: recognize the difference between traditional costing and activity-based costing. Now, traditional costing was chapter 3. We looked at job costing and process costing. Identify the steps in the development of an activity-based costing system. Identify the activity cost pools used. Know how companies identify and use cost drivers. So there's some new terms here: activity cost pools, cost drivers. Look at the benefits and limitations of activity-based costing. And then another new concept. We're going to look at activities and determine whether they add value or they don't add value to the product. Okay, and then we look at activity-based in a service company. All right, and chapter 3 we had the traditional costing systems, or chapter 2, I'm sorry. Chapter 3 was process costing. Allocate overhead using a single predetermined overhead rate. Job order costing, what we talked about at length last class. And then process costing, which I will mention again at the beginning of the next class. But we don't have to worry about process costing. It's just a different type of costing method. Now, because of the way production has changed over the years, we need a new approach to allocating overhead. The problem again, folks, is allocating that manufacturing overhead, because there is no direct relationship between the overhead costs and the product we are producing. Now, in my day, when we produced a product, 40% of the cost would be material, 40% would be labor, 20% would be manufacturing overhead. But today, because of automation, most of the costs now are manufacturing overhead. 50% may be manufacturing overhead, 40% material, and only 10% direct labor. We use more machines than we use labor than we did in the past. And because of that, then, we are looking for a new approach here, because of what we call activity-based costing. Activity-based costing allocates overhead in multiple activity pools. Now, when we did job costing, we just used one pool. We accumulated all the overhead, and then we selected one activity base, like direct labor or direct labor costs. That means we pooled all the overhead together into estimated annual overhead, and we divided through by one activity, which we said direct material or direct labor costs. In activity-based costing, we have many pools and many bases. Now, an activity is any work or event or transaction that takes place in the business. Business is full of all kinds, manufacturing is full of all kinds of activities. We look at each activity separately. And then we look at the different types of activities and accumulate the costs in each one of those activities. And then we say, okay, what drives? What's the cause and effect relationship between the costs of that activity and the activity itself? That is, the number of times I perform that activity, why does the cost increase? And then we have a two-step process, similar to what we did before. We take the overhead costs and we break them into activity cost pools. Then we assign the overhead allocated to the cost pools to the products using what we call cost drivers. Better would be an example. First of all, to begin with, we take the total overhead costs, let's say a million. And we look at it, we say, okay, how much of that had to do with purchasing? How much has to do with storage? These are all manufacturing costs that are not directly related to the product, but nevertheless have been incurred in order to produce the product. How much relates to the machines? How much for supervision? Then we say, okay, in the purchasing department, why would the costs increase? Well, as the more purchase orders we make, the more the purchasing cost. Why would storage costs increase? Well, some products might take up more space than other products. Why would machining costs rise? What drives machine costs? The number of machine hours. What drives supervisory costs? The number of employees. So we look at activities like that. We look at the cost and look at the activities. Here's a more detailed example. The overhead costs again. So much is for ordering, so much costs were set up, so much for machine cost pools, assembly, so on and so on. These are activity cost pools. We take the total overhead cost, which is one big pool, and we divide it into, in this case, 7 little pools. Then we look at what drives the cost in each pool. Okay? Machine hours, of course, for machining. And we call these drivers the cost drivers. Then we look and see how many cost drivers was consumed by each product. So here is a summary of true and false statements. A traditional costing system allocates overhead by means of multiple overhead rates. No, that's not true. Traditional is only one, like job costing or machine. In the job costing, it's labor or machine hours. Number 2, activity-based costing allocates overhead in a 2-stage process. That is true. Okay. Direct material and direct labor costs are easier to trace than overhead. Absolutely, we know that. As manufacturing processes have become more automated, more companies have chosen to allocate overhead on the basis of direct labor costs. No, the opposite is true. We're moving away from allocating it because direct labor costs is such a small cost of the total cost to produce now. And so this is false. 5th question. In activity-based costing, an activity is an event, transaction, which incurs costs. Absolutely true. Okay. Here are the steps now. We're going to go through the steps for ABC. Identify and classify the activities involved, and then allocate the overhead to cost pools. That means estimate the total annual overhead for the coming year, and then break that estimate down into how much is purchasing, how much is storage, how much is machine. Then look at each pool and say, okay, what drives the cost in that pool? What's the cause and effect relationship? Then come up with an overhead rate for each cost driver, each machine hour, all right, each purchase order, whatever the cost driver is, and then assign it to products. It's best to go through an example here. Let's look at, this company produces 2 products, these are exercise products, an ab bench and an ab coaster. Each one takes 1 direct labor hour to produce. And we annually estimate that there's going to be 30,000 hours, 25 for one product, 5 for the other. And the direct labor cost is $12 per hour. Okay. The expected, remember overhead is anticipated, expected, annual, in advance. Overhead cost is $900,000. Direct material costs, the bench 40 and the coaster 30. So what we have now, we can trace the material easily. We can trace the labor easily. The overhead, we have to figure out the rate. So we begin by taking the overhead and divide by the 30,000 direct labor hours, and we get $30 per direct labor hour. This is what we did in Chapter 2. And therefore, for every hour worked on each product, we're going to allocate $30. And there was 1 hour worked on each, so therefore each picks up 30, and we say that the total cost for the bench is 82 and for the coaster 72. That's assigning the overhead cost based on the traditional costing method. Now let's look at the activity-based method. Let's take that 900,000 that we just used and look at it closer and see, oh, 300 is for setting up machines. 500 is for costs associated with machine depreciation, maintenance, repairs, and all that stuff. And 100,000 is for inspecting. Now we're only keeping it small here, 3 pools. In reality, there'd be 10 to 20 pools. Then we say, okay, what drives the cost in setting up machines? The number of setups. The more times I have to shut the machine down and change over some tool within the machine. And how many times will I be doing that in the year? 1,500. Okay. What drives the cost of machining? Oh, the more we use the machine, the more repairs, the more maintenance, more electricity, more everything else. So therefore, machine hours. And we estimate 50,000 machine hours. What about inspecting? Number of inspections, we estimate 200,000. So now we got the expected use of the cost driver per activity. Now we take the estimated overhead per activity and the expected use of the cost driver, and we come up with an overhead rate for each activity. And to do that, the estimated overhead 300, the estimated number of setups 15, so therefore every time we set the machine up, we're going to charge 200 for that product that's being used to set it up, that is being set up for. Every machine hour that's good, we're going to charge $10, so we'll keep track of all machine hours that were worked on each product. And inspecting 50 times $50 per inspection. So we have the activity rates. Now we simply assign them. We look and we say, okay, the bench is going to be 500 setups. Throughout the year, the coaster is going to be 1,000 setups, twice as much. In machining, the bench is going to take 30,000 hours to produce those 25,000 units, whereas the coaster is going to take 20,000 to produce its 5,000 units. And the same with inspections. The number of estimated expected activity. So now we just assign it. We say, okay, for the bench, for all in the year, expected use 500, activity 200, we're going to assign 100,000 of the overhead costs. Of the 900 overhead costs, 100,000 is going to be assigned for setup costs to the bench, to the ab bench. Machining, 30,000 times 10, 300,000. Inspecting, 25,000. So 425,000 of that 900,000 is related to the bench. And we're going to produce 25,000 benches, so we say it's going to be $17 a bench. For the coaster now, it was going to use 1,000 setups because it's a specialty kind. And every time we said it's going to cost 200, so it's going to be assigned 200. All the benches will be assigned 200,000 for setup costs. Machining, they're going to do less machining than the bench, so it's 200,000 again for the coaster, and 75 for inspecting. So 475 of the total overhead costs of 900 will be assigned to the coaster. And the coaster, we only produce 5,000 a year, therefore $95 of overhead will go to the coaster. So to review again, under the traditional, we said that the unit cost would be 82 for the bench and 72 for the coaster. Both of them picked up an equal amount of overhead, 30 and 30. But when you look at the activities consumed by the bench and the activities consumed by the coaster, and you cost each activity, like 200 or for a setup, and then you see how many times you have to set up for the bench and how many you have to set up for the coaster, you come up with under ABC a different. You said, okay, the overhead is going to be 17, not 30, because it doesn't consume as much overhead as the coaster does. The coaster has been assigned 30 overhead, but if you look at activities, it's been costing 95. So you see, we have overcosted the bench, which makes it hard to sell, because the true cost and our competitors' costs are probably closer to 69. Whereas the coaster, wow, my goodness, we'd be selling them very easily because they actually cost us probably closer to 137,000, and we've been saying it's cost 72. So we set our prices according to what we think our costs are, and that's the problem. Now, the best thing to do is to go through an example here, a complete example, and I'll indicate to you what I would expect from you on an exam. I would give you all this material. We have 5 activity pools: ordering, receiving, machining, machine setup, assembly, inspection. Okay, we have those pools. And we have 2 products, scissors and hydraulic, 2 types of jacks. Now, here are the cost drivers: purchasing orders for ordering and receiving, setups for the machine setup, machine hours, parts, tests. The overhead is $5,300,000, and we have determined that 200 of that is ordering, 600 of that is machine setup, 2 million of that is machine hours, and so on. The expected use of the cost driver: 2,500 orders, which are going to cost 200,000. 1,200 setups, 8,000 hours, and so on. And this is what we expect the scissors to consume. The scissors are going to consume 1,000 of those purchase orders. Hydraulic, because there are many more parts, more purchase orders, therefore they're going to consume more than the scissors. Machine setup, 500 for scissors. Because hydraulic is more complicated, more setups. And again, more machine hours, but less assembly. Look at the number of hours for assembly, for scissors, and so on. So this would be given to you in a problem. What you would be asked to do then is prepare a schedule showing the overhead rates per cost driver, and then for each overhead cost to the two products, you must assign them, and then compute the overhead cost for each and the comparative overhead per unit. For example, here's the data that we just had, and I would want you to come up with the activity-based overhead rate. For ordering and receiving, well, that's the estimated overhead divided through by the expected use of the cost driver. So 200,000 divided by 2,500 gives me $80 per order. Machining, 600,000 here. Okay, 1,200 setups. So it's 500. So we're just looking up to here. We're just going up to here. Okay, machining, assembly, this. So I've taken the 5,300, divided it into the pools, looked at the cost drivers, and came up with the rate per cost driver. Now these are the expected usage. So now I'm going to assign these overhead costs to the scissors and to the hydraulic using $80 per order. And that's what I do the next step. I'm doing this one here, scissors times $80 per order, and the rate is 80, estimated assigned costs. Expected use of the cost driver for jack was 1,000 times 80, which is 80,000. 500 times 500, which is 250. And we go through, and of the 5,300,000, 2,560,000 is for jack. Now hydraulic was 1,500 expected use of the cost driver, 1,500 times 80, and so therefore it's 120. 700 times 500, and you get this, and you can see how we assign the costs. So you've come up with the overhead rates, which I've asked you to do, and then you've assigned them to the scissors and to the hydraulics. So now the total amount of the 5 million, so much goes to scissors and so much to hydraulic, number of units produced, overhead cost per unit. So you see, for every unit of scissors, we're going to assign $12.80 for every unit of hydraulic. Now this is all estimated at the beginning of the year, but this is how I assign the overhead. So the benefits of activity-based costing, we have a more accurate tracing of cost to the products by looking, first of all, we are tracing the cost to the activity, and then we get the cost per activity, the overhead rate per activity, and then we assign that rate to the number of activities consumed by each product. So it helps for better decision making. One of the limitations, of course, in this example, we only use 5 pools. In a manufacturing environment, you could use 50 pools with 50 different cost drivers. So it can become very complicated. Only, for a small business too, because it's a lot of tracing of costs, but it's more accurate cost analysis. When should we use ABC? Well, if we have a lot of different kinds of products that take a different amount of inputs and consumes a different amount of activities, more purchase orders, more setups, more storage space, then we can use activity-based costing. Now here's another concept. When we begin to look at activities, as managers, we begin to analyze activities, recognize that activities consume flus. And if I can reduce the number of times I perform that activity, I can reduce the costs, the total costs of producing my product. So this is called activity-based management, ABM. What I do is I look at each activity from the point of view of the customer. and I say, if I was to eliminate this activity, would the customer recognize a decrease in the quality of the product? If the answer is yes, then that activity is value added. It adds value from the customer's point of view to the product. If the answer is no, that is, if I reduce this activity and it has no effect on the quality of the product from the perception of the customer, then that's a non-value added activity. So if I can look at activities and determine the value added ones and the non-value added ones, once I identify the non-value added ones, then I can look at ways of reducing the costs in the non-value added because it won't affect the quality of my product. For example, value added versus non-value added. In a manufacturing company, the design is if I reduce cost of design, that would have an impact on my product. If I reduce the assembly cost or the painting cost, they could be perceived as a poor quality by the customer. Same with a service company. If I reduce the packages, that could have an impact on the customer's perception of the quality of the product or service. But look at some non-value added activities. Repair machines. The number of times I have to repair a machine, that has nothing to do really with the quality or the storage of the inventory or the maintenance or inventory control. If I can produce a better product and I have better machines or more up-to-date machines, I can reduce the cost, the repair cost, I can reduce the inspection costs and so on, and this would not have an impact on my quality of my product. Same with a service company. Reception is very important. Ordering supplies, advertising. These are costs you can cut back on and will not. They're not value added. Okay? For example, let's do some. Okay, we're talking about a water ski manufacturer. Which activities are value added, which are not? Inspecting the completed skis. Well, inspection doesn't add any value to the skis, not value added. Storing the skis. Well, where I store them and all that, unless I put them in tremendous heat or something, but average storage costs would not have an impact. Machine setups. The number of times I would have that would not have an impact. Installing the bindings, though, if I cut back on any costs that have to do with installing bindings on skis, that's a value-added activity, and that would have an impact on my product. Packaging the skis, again, that too, if I don't do a good job packaging, the skis could be damaged, the customer would be unsatisfied. Reworking defective skis, that's non-value added. So you see, you look at these activities from the point of view of the customer. And as a manager, then you can focus on the non-value added activities and reduce those costs without reducing the quality of your product. So the overall objective of activity-based costing, when we apply it now to a service industry, it's the same idea. We look at activities, cost pools, drivers, value added, non-value added. So I mean, even if you're in government, you look at all the activities that are taking place, classify them into different pools, and look what drives those activities. And then look at activities that are value added to the customer versus those that are non-value added. There's a traditional costing example. We come up with the operating income. We are doing the estimated overhead only on one rate. Okay, so we come up with our income that way. Activity-based costing, we take that overhead that we just allocated, we break it into different services, customer development, administration, what have you, look at activity, and look at the rates. So we can assign it to the products that way. So that's another way, that's using activity-based costing in a service example. Okay? And that's it for this part of